Guys, I've tried to explain these treasuries and what's happening in this market 500 times. This is my 501st video. I said I was going to get on and talk about the technicals, and it's so hard to break this down, and I keep going down rabbit holes and keep going down crazy things. Long story short, typically in financial markets, when there's uncertainty, people will pull money from stocks and put their money in safer investments like treasuries. That typically causes mortgage rates to get better, to get lower. Now, when there's a ton of uncertainty, when it's absolute chaos, the market doesn't function the way that it usually does. And we're seeing what we've seen the last couple of days, where the 10-year treasury went down, got as low as 3 in the 380s, popped up to the 450s today. You don't typically see 70 basis point swings in the 10-year treasury in a matter of 2 or 3 trading days. It's wild. Having said that, there usually what happens is when there is absolute chaos like this, on the other side of it, things get calm and they typically react and move in the trajectory that we were on before, which I think is headed towards getting the 10-year treasury down lower, meaning mortgage rates are going to get better, and it's all going to work out. It's all going to settle out in the wash. The short term might be a little chaotic. Another thing we have to watch for is China currently is the second largest holder of U.S. Treasuries. They own just under $800 billion of U.S. Treasuries. Now, I don't think that they're going to sell any U.S. Treasuries that they own, because by doing so, yeah, it would absolutely pummel our economy, but it would also cause a lot of pain in their economy as well. And so I don't know. I mean, maybe they are crazy enough to do that. But one of the bigger things is there's $39 billion in treasuries that are supposed to roll off tomorrow. If China doesn't bid on those, then the 10-year treasury on our side of things could go to 5 or 5.5%. I don't even know what that would do to mortgage rates in the very, very short term. But I know that through some of this chaos, typically what happens is it's going to get calmer. We're going to head in that direction. Things are still projected. There's a lot of people through there's a lot of economists that are actually pointing towards the 10-year treasury approaching 350 in the fall. And in that situation, if the 10-year treasury approaches 350 in the fall, typically we're going to see interest rates in the high 5s. I mean, that'd be awesome, right? So looking at all those things, there will be some calmer days ahead, but it's just a little wild right now.